Hello guys, welcome to the Trading Parrot. Bitcoin is trading at $84,000, and contrarian to what I was thinking, which is Bitcoin is first going to take the liquidity right below it before shooting up into the CME gap. Instead of that, Bitcoin decided to just go straight to 84K. And in this video, I'm going to reveal what is the reason why Bitcoin might be heading towards this level. Is this really because Bitcoin is decoupling with general markets crashing big, initiating a deeper correction potentially, while Bitcoin is just doing fine? So I'm gonna discuss one reason why potentially that could be just a temporary glitch before Bitcoin then decides to go back down to take that liquidity that we left untouched. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. If you want to trade these particular setups that we're gonna discuss in this video and in future videos, and you want to support the channel, consider opening an account on Bluffing. There is currently a 10% cashback. It's a non-KYC exchange, so it takes really very short to get an account up and running. The first 50 users can claim this deposit bonus. So all over Twitter, I've been checking and everybody is celebrating the fact that finally Bitcoin is managing to put a green day in the context of general markets really putting a decent correction. We have Nvidia with minus 8%, Apple minus 9% at closing prices, Amazon 9% down, and this was as a result of the tariffs. So people are starting to speculate, is this really to do with Bitcoin finally joining gold as a safe haven? I'll give you the answer of that in just a second. First, let's look at what we have today. In just a few hours, we're going to have the unemployment rate. The expectation is that it stays flat. Later in the afternoon, we'll have Powell's speech. We'll see if the corrections that we are seeing in the stock market are enough to force the hand of Powell to finally introduce rate cuts, or at least give the hint that they are coming either sooner or larger cuts. All right, let's go to the 4-hour and let's see where we left it last night. Last night we were spotting these head and shoulders. We say that the price was already below the neckline, confirming the breakdown. And despite the target down to 76K, which was quite bearish, I decided to look for a long setup in the area around here. Unfortunately, when I managed finally to look into the charts around 14 hours ago, when I was still on my phone doing parenting and taking care of things, I just got a quick look at my phone and I noticed that things started to look bullish at 81K. And I gave a hint to my community on Patreon, saying that some things that I managed to see while I was doing so many other things at home were looking pretty good. That as soon as I could sit down and look properly at the charts, I might place some orders. And I did place some orders, but by the time they were on the exchange, price was already beyond 82K and leaving me behind. And I was looking specifically at the liquidity that is on the low 80s and slightly below 80s as well. At the moment, we can see on the 50-minute chart that we left all of that without even looking at it. And this is the thing that has me puzzled. I do not believe that Bitcoin has just now, overnight, suddenly become the safe haven. I do believe that if there is a huge crash in the general markets, Bitcoin will not rally like gold. One day it will. I just don't think that it's ready for the test. That's just my opinion. Let me know in the comments if you think, honestly, with a hand in the heart, if you're holding right now all your savings in Bitcoin and the market crash was about to crash and someone has a crystal ball and tells you tomorrow S&P will correct 50%. Will you put the hands in the fire and still hold all your savings in Bitcoin to pass the test because you are convinced that is finally the safe haven? I wouldn't. Totally honest, I wouldn't. And this now inverse head and shoulders on the 15 minutes, it's currently targeting from the neck that is roughly around here. It's targeting our level 3, which is 86.2. That's the daily resistance. You can see it in here in the falling wedge, more or less around the 200 daily actually. So I think that there is more motivation to go to that level than just purely the CME gap and the fair value gap that we have above it. Liquidity, I don't see anything left. We just took all this range. So why going into 3 now beyond that CME gap and beyond the fair value gap? What is the trick? The fair value gap ends at 86.2. If we go to 86.5, we're kind of breaking out outside the wedge, which is a daily pattern in here. And we are doing that in this context. That is crazy. If we did it, of course, we haven't done it yet. So it is not liquidity pools, and all we have at the moment to sustain and defend the idea that, oh yeah, we can break out on a Friday today after announcing tariffs that are threatening not just the American economy, but the global economy. So what else do we have at hand? Well, we have our friend the CME gap, but that ends at 85.3. And we were very close to it on Thursday, but we decided not to go to that and instead to put a new low. So what was all this about, really? And after doing a little bit of searching, I found that there is 2.6 Bitcoin options about to expire today. And my first question was, where is the max pain point? And that is currently, as you can see, located at $84,000. That means that if at the expiry time price is right there, most people won't be able to cash a profit. And that usually serves as an incentive for price to seek or to get as close as possible to that level, so market maker makes the most profit, the house and the traders don't. On Ethereum, that is at 1.850. By the way, there is a put to call ratio of 125, and the number of contracts expiring is 139,000 BTC. So it's a pretty significant amount. Some other things that are not really making sense is the divergence between what the price is trying to convince us that finally Bitcoin is able to do, the safe haven, and at the same time we have this spike of the big whale explorer. These are large holders. Then yesterday the candle fully settled with 21,000 Bitcoin inflows into exchanges yesterday. I can clearly see from the price action from yesterday that the price is going up, and you see the price going up and they are depositing into exchanges. They are pushing the price higher, so watch out. No setup in history from any technical analyst has a 100% probability of playing out. But if you have these deposits, and at the end of the day they are not only a transfer internal between wallets on exchanges, which sometimes can turn into a fake positive. In this case, if it's a genuine deposit from a large holder group of whales. The last time we were at these highs, that was at the peak in here when we were getting into 100K and they were preparing their distribution that they perfectly execute consistently at the highs. Every time we went above 100K, they distribute a little bit more until eventually we enter in accumulation once again in this area. But seeing this spike at the moment at 1.2 in the ratio, together with that incentive to move the price to 84K, those are two wrong incentives for price to go up. It means that most likely those are short-term lived move up. So what's going to happen with my trade? Basically, my order is right there unfilled. And if we go to 84, or if we fill the CME gap, or even if we meet the full target of the inverse head and shoulders on the 15 minutes, which is a time frame I do not trade, let's say price goes to 86, and then suddenly the incentive to keep the price up is no longer there. Then if price crosses this liquidity in here, we're no longer interested of breaking out to the upside, that is where we are risking potentially to not stop in here. My trade was based on catching this liquidity, which was very close to the price, and then entering there together with more longs to hit the CME gap. But we are now at 84.2, just dollars away from the CME gap. And I believe that possibly they're keeping artificially the price around 84K. One thing I haven't been able to confirm is the time of the expiry. And apparently the contracts have already settled. So the question is, how long are they gonna take to then later remove that incentive? So let's assume that the incentive now to keep the price towards 84 is gone. Then the incentive of the CME gap is still there. I will say keep more than one eye in the price after we fill that CME gap that I couldn't manage to put my hands on, unfortunately. Guys, if you want to take a long or a short on Bitcoin and you want to do it in one of the biggest exchanges, you can consider OKX. If you use the link in the description, you get the lowest fees to trade on OKX. You support the channel and you can grab yourself up to 60,000 in rewards. Thanks so much for watching. I'll see you on the next one. Take care. Bye bye.